Until last week, Bitcoin was smashing through new all-time highs and marching higher. However, the tone has shifted. Tariffs have pushed inflation up fast, and the rate cut narrative everyone wanted is losing steam. And on top of that, Jerome Powell's speech at the Jackson Hole meeting this Friday sparked major volatility in the market. This is the kind of setup where weak hands get destroyed and where top traders rise. Today, I'm bringing an analysis that tears the Bitcoin chart apart, so stay locked in to the end and make sure you walk away with serious, actionable insights. What's up guys, it's JC here. So lately, Bitcoin hasn't been looking so steady, and that's why I rushed to put this video together. But before we get started, we just crossed 100 subscribers. To everyone who recognized me early and subscribed, I prepared this video to give you as much value as possible, so make sure to watch till the end. And let's first review my last video. So to quickly recap my last video, when I uploaded that, Bitcoin was trading around 117K, and I said it wasn't the right time to chase the price, but rather to wait and start scaling in between 114 and 112 with 110.4 as the stop loss. The full reasoning is too much to repeat here, so I recommend going back and re-watch that video for a quick refresher. Anyways, just like I mentioned back then, the drop to around 112.6K played out and I began scaling in from 114.2. Therefore, as of now, my average entry on this long position sits at 113.6K. But here's the thing, the reason I'm making this video today is because my outlook on the market has slightly shifted after considering the current conditions. As usual, let me get straight to the point, as of now I'm leaning more towards the downside. Now you might be asking, if you're bearish, does that mean you're closing your long and flipping short? The simple answer here is no. I'm still holding my current long position with the stop loss around 110.4K unchanged. What I'm planning to adjust though is my TP target. I've been thinking where exactly to lock in my profits, so under normal conditions, I would have aimed for the heavy resistance zone around 117 to 119K, and if sentiment were stronger, I would consider even higher levels. However, as you can see, the current market tone isn't that great. That's why I think a deeper correction from here wouldn't be surprising. But before that correction actually happens, we could see one of those typical fake moves where the market pumps up briefly to trap longs and wipe out high leverage short positions. And when that happens, I look to exit my long position. The exact level will depend on how things play out in real time, but I'm roughly eyeing on that 115 to 116. And if I do decide to close there, I'll update you immediately, either through another video or a community post. So make sure you're subscribed with notifications on. Now let's dive into analysis behind why I'm leaning more to the downside. First, let's start with the macro side. So ETF flows are flashing warning signs. We've now had 3 straight days of net outflows on both Bitcoin and Ethereum spot ETFs. Normally, even if other firms are selling, BlackRock steps in usually with heavy buys and turns into net inflows. But in the last 2 days, even BlackRock showed net outflows or stayed completely flat. And that's not a good look. If it was early in the month, we could argue it's just portfolio rebalancing. But right now, this looks more like institutions are just going risk off, preparing for a potential drop. And on top of that, this Friday, we've got Powell's speech at Jackson Hole. And after last week's hot PPI, the odds of him sounding dovish are slim. Obviously, the key question is rate cuts. September is basically locked in, even though odds slipped a bit from 90% to 83%. But what really matters is what happens next. Are we going to see a back-to-back cuts in October and December, or Do they cut once and then pause? Powell probably will not give a straight answer. He'll just stick with the usual data-dependent talk. And either way, the market will swing hard in real time. And here's the setup. Because the price has already dropped into Powell's speech on risk-off flows, if he isn't overly hawkish, we could see a sharp bounce up, more like a dead cat bounce, not a real reversal. And that's the type of move where I'll look to close out my long position. Of course, like scenario 1 here, the price could still push higher. Anything can happen in the market. But given how things have developed, scenario 2 here, where a drop plays out, is also very much on the table. So that's why this is a point where I'd rather secure my profits and then look for the next entry. Think of it as a strategy rooted in risk management, not just prediction. Now let's take a look at the chart. So this is the uptrend line we've been following since the 74K bottom, the same one I highlighted in the previous video. And as I mentioned, I was watching for a buy when the trend temporarily broke down, and that's exactly how it played out. Here's the issue. Instead of bouncing back with strength, price is stalling and grinding below the line. A sharp flush drop towards the 111K area followed by an immediate rebound would have been far more bullish. And if we take a look at the Bitcoin 1-hour chart, the weakness is even clearer. Both the highs and the lows are stepping down one after another. So this is the 3-day chart with the Bollinger Bands. The mid red line is the 20-period moving average, and the blue lines above and below are the upper and the lower Bollinger Bands. And if you look closely, since April here, once price broke above the 20-period moving average on the 3-day chart, it has never closed below it for almost 4 months straight. Now, there were a couple times when candles left wicks under the line, but every time it eventually closed back above the 20-period moving average. And today, for the first time in like 4 months, we got a close below the 20-period moving average on a 3-day chart. So based on that, it wouldn't be surprising if price moves further down towards the lower end of the Bollinger Bands. And now this is the 3-hour Bitcoin chart with the Bollinger Bands. And looking at this chart helps us understand short-term moves. Price broke back above the lower band and then faced resistance at the 20-period moving average, and once again found support multiple times at the lower band. So from a short-term trading perspective, if price reaches this 3-hour 20-period moving average, it could be a solid spot to start taking profits. So today I shot this video quickly to share some short-term position strategies, and here's a summary. So first off, the macro. The flow of spot ETF capital isn't looking too good. Both Bitcoin and Ethereum ETFs have shown 3 straight days of net outflows. And yesterday alone, Bitcoin saw $523 million outflow and Ethereum saw $422 million. Those are pretty big numbers, and this needs close monitoring. And if this outflow trend continues, a faster exit from my long position may be required. And on top of that, Powell's speech at Jackson Hole this Friday is critical. So one hawkish sentence could trigger heavy selling across the market, so I'll be watching carefully. And second, the chart. So as I explained in the last video, I bought when the uptrend line briefly broke, and that seemed like a pretty solid entry, and my average at 113.6 doesn't seem too bad. But on lower time frames, both highs and lows are slipping lower, which isn't ideal. And on the 3-hour Bitcoin chart, price is rejecting at 20-period moving average and holding support at the lower Bollinger Band. Short-term plan is simple. If price touches this 3-hour 20-period moving average again, I'll start taking profits. So on the 3-day chart, something significant happened. Since breaking above the 20-period moving average in April, Bitcoin never closed below it until today. This one is the first closed candle under the 20-period moving average on 3-day Bitcoin chart in like 4 months. So looking back in history, when this happened, price often moved towards the lower Bollinger Bands. So that scenario is on the table now. For spot investments, it's different, but for leveraged futures trading, it's never about pure prediction. It's more about response. We build scenarios, we analyze. That's what top traders do. But what separates a good trader from an elite trader is the ability to respond with precision. And I hope today's update helps you position yourselves better. And I want you to know that your support, subscribes, and likes actually drives the channel forward. And if anything major develops, I'll be back with another update. See you in the next one.